Hey folks, a quick update here. A couple weeks ago, Casey and I did a 6 month review of the chip stock investor semiconductor portfolio. And I said Qualcomm was one of three top semiconductor stocks we're buying right now. And upon a little bit more review, Qualcomm has become our top semiconductor stock we're buying right now. Let me give you a quick rundown on why that is. Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support as subscribing to the channel helps us continue putting out content like this. Fun little known fact about Qualcomm, many investors refer to Qualcomm as a fabless semiconductor company, meaning they only design chips and they use third party manufacturers to handle all the heavy lifting with actually making the chips. That is not so. Like Broadcom, which I reviewed about a month ago, uh, Qualcomm does primarily use third parties to manufacture chips. However, here's a little finding in the company's latest 10K for fiscal 2022. Qualcomm CDMA Technologies primarily uses internal fabrication facilities to manufacture certain RFFE modules and RF filter products. And our manufacturing operations consist of front end and back end processes. Front end processes primarily take place at facilities in Germany and Singapore. And then the back end processes include assembly, packaging, and test of RFFE modules and RF filter products. These are located in China and Singapore. Now, what are RF and RFFE chips? Well, the RF stands for radio frequency, and the RFFE, the FE stands for front end. These are the little chips inside mobile devices that actually enable the device, say a smartphone, a tablet, or something similar, to be able to hook up to a mobile network. Qualcomm has quite the extensive lineup here in this department. Most of these chips go into the mobile devices themselves, and a growing number of them go into actual infrastructure, say like 5G and Wi Fi internet infrastructure. Cool little factoid, but why does it matter? Well, I'm glad you asked that question. Let me show you some interesting little financial tidbits to go along with that little factoid about Qualcomm not being a fabless company. I've got my ticker terminal pulled up here. And if you've been following along, you know Qualcomm's last quarterly financial update was quite ugly. You can see the net income here over the last 12 months. A big, giant drop off from the previous trailing 12-month period reported late in 2022. And jumping over to the cash flow statement, you can see a big, even more dramatic drop off in free cash flow late in 2022. And then suddenly this huge surge in free cash flow after the last 3 month period that we just had here to kick off Qualcomm's fiscal 2023. What exactly is going on here? Well, because Qualcomm manufactures these RF and RFFE chips in house, uh, even though there's a big glut of inventory right now, they've been withholding shipments of many of these chips to their customers. Qualcomm has continued to manufacture many of these chips. So this is the company's inventory, which you can find on their balance sheet in their quarterly filings, and you can basically see the inventory level quadrupling at points or tripling from points where it was just 3 to 4 years ago. So this massive surge in inventory over and above Qualcomm's historic norms. And because that inventory has built up so dramatically, this is one reason the company's free cash flow has been depressed as of late. However, in the last earnings update, CFO Akash Palkawala said on the earnings call that this glut of supply has almost been worked through and that Qualcomm is well positioned to take advantage of a resumption of demand, perhaps the second half of 2023. Now, look at an inventory level like this, and basically one of two things has happened. Either Qualcomm has made a massive mistake in, in overproducing these chips, or the company knows there is going to be this boom in demand in the next couple of years. And so it's continued to build up inventory, has taken the hit to its profit margins along the way. And now that those chips are paid for, once demand picks up pace again late in 2023 and into 2024, we could have a massive surge in free cash flow. I think it's a combination of both factors, but I think I'm leaning more towards Qualcomm seeing a surge in demand coming in the next couple of years, 2023, 2024, and into 2025. I thus think Qualcomm is quite the deal right now, especially if you're looking at owning this for the next 2 to 3 years at least. Stock currently trades for less than 12 times earnings, about 17 times free cash flow. But I think we're going to see a massive surge in free cash flow later this year and into next year. Uh, Qualcomm looks mighty cheap to me. That's why this is my top semiconductor I'm buying right at this moment.